Active traders know that big gaps can provide great trading opportunities. But how do you trade a gap exactly? Because if you don't have a strategy, it's easy to get crushed trying to trade stocks that have gapped up because they tend to be more volatile. In this video, we teach you a powerful gap trading strategy and show you how to use the tape to detect when a change in price action is occurring, which is what helps you decipher which way a stock will trade after gapping up. I'm Mike Bellafiore, and we're one of the top proprietary trading firms located in New York City and proud to have developed numerous 7 and even 8-figure per year traders. We hope you agree this is the top YouTube channel to help you grow your trading account.
This is my playbook. The trade is the gap give and go. I'm Carter, and this is on DraftKings DKNG on May 5th, 2023. So for the bigger picture, SPYs and Qs, the SPY is basically in a range on the daily, which is that bottom left chart.
Did the bigger picture have any impact in this trade?
Honestly, no.
Okay.
I talk about that later.
Let's jump ahead. Yeah.
All right.
I mean, it's important. Usually we care about the bigger picture. We only care if it's relevant to this trade.
Mm-hmm. I throw that in there. That second bullet point says higher focus on individual catalysts and baskets. So
Perfect. Okay. That's great.
Yep. So same thing. There's really no backing with the bigger picture. The only thing is ADD is holding 2,000, so that it's not hurting my trade.
Yep.
That's the only thing.
Yep.
For the intraday fundamentals, so for DraftKings, some background, it's just an $11.5 billion market cap stock. This is one of the top stocks in play with strong earnings for the catalyst. I graded this as an 8. We were gapping up 16% on elevated RVOL, and this was also the top name on the S&B scanner and radar. So I listened to their earnings call in the pre-market actually, and it was really positive. A ton of growth in the future, especially expanding their market share into the sports betting world. So the top takeaways for me of the earnings, reported revenue was $770 million, which was 84% up from the prior period.
So they're showing good growth.
Yep. And then
it raises their guidance to midpoint. That's good.
Yep. Yeah. The only thing I would note is that it's at negative $315 million, so they're still not technically profitable.
Yeah, they're not profitable.
So that's why this catalyst wasn't higher than an 8 for me.
But their beat was pretty good because they were expected to lose 84 cents a share and they lost 51 cents a share.
Exactly. Yep.
Okay.
So for some of the stats, just the RVOL, we traded 2.6. It wasn't crazy high, but definitely elevated, so that's important.
Yep.
The ATR I thought was important to note at 1.13. Short float almost 7. That's not insignificant, but something to be aware of.
It's pretty low. I don't care about it at all. So okay.
And then,
all right.
So I thought this was a real quick, important slide, but the competitor comparison, this is year to date. The top chart there, top line you can see is DraftKings, and all the rest.
We're looking at the stock prices.
Yes.
Is that the return? Okay.
Yep. So from the beginning of the 2023 year, this is the clear winner.
That's a really cool chart, actually.
It is, yeah.
Especially for something like this, which is essentially we're talking about an unproven sector.
Mm-hmm.
And so we're trying to distinguish who's going to be the clear winner.
Well, even like LVS was one of the other ones, like Sands.
Yeah.
That's one I looked at, and it was very clear how strong this is.
That's pretty cool. Okay.
Technical analysis on this stock. The chart on the left is the weekly. So basically we get all this hype a few years ago, trend lower, and we've pretty much been consolidating for the last year. And that chart on the right is the daily, and we're finally breaking out of it. Clear break of resistance in an uptrend. So all positive stuff to go with the trend higher.
Yep.
Technical analysis, the previous swing high of 22.
This is the intraday chart.
Yep, the 1 minute on the left, and I believe it's the hourly on the right. So levels being at 52-week highs, it's not like we had anything super significant, but the ones I thought were important were the daily breakout level was at 22.74, and then that kind of lines up with the 23.
Yeah, it's still 26 cents away, but it's a generally a good one. You can also pay attention to, it looks like after hours, there was buying at that 22.75 almost, or I'm sorry, at that 23.
Yeah.
You notice a little bit of buying there. that just is an indicator, right? It's not really a great level on its own, but it's something to pay attention to, especially when you see it that clearly, because then it breaks out from there after. So that's interesting. Okay.
Yeah. So aware of the pre-market level. Like I said, technical levels are important, but this is much more of a tape and price action influence trade being above 52-week highs.
Okay.
Oh, one more thing on that. So just from a technical analysis standpoint, you're able to draw a clear intraday uptrend from that low.
Well, this is after the trade. So let's talk about the setup.
Sounds
first.
good.
Yeah.
For the trade strategy, this is the gap give and go. Essentially, in the shorter picture, it's a gap up on a clear catalyst.
Clear positive catalyst, I'm guessing. Or it could be
very
a gap
strong.
down on a clear negative.
Yeah, it can go either way for sure.
Yeah.
So we get the gap up. I'm looking for a first move down. Talked about this. It's not necessarily due to profit taking, but that could be a reason.
Yep.
Come back, retest a previous resistance level, and then I want to see those bigger picture buyers step back in, basically buying on that pullback to bring this higher.
Yep.
So a couple notes. I'm willing to add on the VWAP reclaim, a back through open or pre-market high, but I have to see.
Let's get a little more precise here. What do you mean by put in a turn at the level?
So for me,
how could that show up? Yeah, there's probably less than we think. Like, I think we oftentimes come into the concept of something like this and think there are so many different things that can happen to show up at each of these price levels. A pull into the price level, there could be, and in my mind, I'm thinking there are probably like 20 different things that could happen. How do I decide? And the reality is there's probably about 3 or 4.
Yeah.
We tend to overthink what can happen, and as a result, potentially undervalue the significance of the things that really can give us edge. There's a difference between what can happen and what actually gives us edge in the trade. And so being specific about what actually gives us edge versus just what can happen is a very important thing to do.
Yeah, that makes sense. And not everything's going to trade super clean. It's essentially the same buyers, just it might not be the cleanest thing in the world.
Correct, exactly. So what provides edge for you for your trade is a really important factor.
Yeah. I'll get to that next. But in general, this is, for me, a move-to-move trade.
Yep.
I have a couple targets in mind, but I'm really focusing on only selling into extensions and then really waiting for that trend to end for this trade. Okay. Probability variables. The big one for me is the catalyst. Is this a stock in play? Are you having a very strong or very weak fresh news catalyst? I thought the 23 level was a key technical level. So that's something you want to be able to trade off of. And then are we trading on elevated volume? Those are the 3 things I look for. And we really did get all 3 of those. So
perfect. Okay.
For the setup, one of the things I've noticed is how big the gap is can often determine the strength of the setup.
That's a really good point, because unless it's a 9 out of 10 or 9.5 or 10 out of 10 catalyst, a gap that's too much doesn't line up with the quality of the catalyst. So 20% is probably a good general guideline, but you maybe want to think about, and we can do this more over time, for a positive 8 out of 10, is a 10% gap up significant? Is a 20% gap up too much? Is a 30% gap up too much? You want to have this sliding scale that you sort of work with. But in general, you're right. Super large gaps can be tougher to trade because there's just too much indecision. Nobody knows really what to do with their position. And you're not going to have people as inclined to chase after that unless there's some really fundamental changing news catalyst.
Well, NVIDIA is a perfect example that we get such a big gap up. It's like, okay, the news is awesome, but we ranked it as an 11 out of 10 if we could.
Yeah.
Yep.
So having a sliding scale a little bit there of really what should happen based on the quality of that catalyst, and is that happening or not happening? So, okay, that's good.
So definitely want to keep the data for those percentages. And then really, what is the edge? To me, with all these things lining up with the trend, very strong news catalyst, I'm thinking bigger picture, bigger buyers are going to want to step in, especially after listening to the earnings call. So I'm looking for that key level. And like we said, it's not going to be the same pattern every time, but I want to see buyers stepping in on all time frames here.
Yep.
And then once again, trade with the trend. So for my trade management, the entry, I kind of struggled with this. I'm like, oh, should I have fought for price down in those wicks? And I'm like, no.
You always need to fight for price, but you have to know where the probability.
Yep.
And this is a great trade example of what the right side of the V is.
Mm-hmm.
You know, if you're just buying in, there's a chance you're buying in on the wrong side of the V. So fighting for price doesn't necessarily mean fight for the low all the time. It means start to get aggressive when the highest probability outcome is that your trade's going to work out.
Mm-hmm.
And this seems to be that. So
this shows a little differently where VWAP was compared to my chart.
Yep.
But that first buy was trying to be right when we broke that low day consolidation. Stop is under the low, clear stop, and what else?
yeah, so this is what what did you call this trade? A drop?
Gap, give, and go.
Gap, give, and go. So you have a gap up, and then it gives
Give in
back
those first
some,
two, and then go.
and then it goes. And you're looking to enter on the go part. You
Yep.
can't enter on the give part because these can just keep giving and giving and giving. But letting that give occur and then entering on the go part is really important. So
Mhm.
okay, good.
So there's a few ways I'd add to this. Above VWAP, if we reclaim that on very high volume, that's
yeah,
significant. So that's definitely one of them. But I did not get the volume here. So I was able to add, but I didn't get my full size that I wanted to, specifically because the volume wasn't there for me to really hit this hard.
makes sense.
Um,
Yeah, and you don't want to. Again, it's one of those variable checks that when you don't have it, you don't really want to force it. You just can't force it.
Mhm.
So that's good. Okay.
Some of the profit targets were pre-market or high day, pre-market high. And then I kind of use ATR as a measured move, like with Arvol, like how much Arvol are we trading. And I say it's not an exact science, it's more of an art. Just because you're trading 5 Arvol doesn't mean you're going to trade 5 ATRs, but it gives you some idea of where we could trade to.
Yeah, you usually multiply half of RVol times the expected move, roughly. So 2 RVol, you can expect about 1 full ATR conservatively.
Mhm.
5 RVol, maybe 2.5 ATRs. 20 RVol, maybe 10 ATRs. But, it probably actually slides down a little more from there.
Gotcha. So yeah, I add once that battle is won at VWAP by the buyers, and then kind of look for the trend to continue, and then ride it until it's done.
Okay, great.
Reading the tape, kind of cover this before we actually watch the video. That's the tick chart on the top left. You can just see that this was a very clear
Wow,
consolidation
that give
zone.
part, that selling pressure was so aggressive.
Yeah,
That has to be a check in your favor for this trade then when it turns.
the first move down.
Yes.
Yeah, so one of the I didn't cover that in depth into the all the variables.
But they
of the
just
trade.
do not let it lift at all.
Yep.
Okay.
Exactly. But that fast, so this is really key, that fast move, but also on insignificant volume,
Okay.
it shows that that first move is very unsustainable. And then especially once you get that turn, I mean, everyone's on the same side.
Yep. But you
almost
have
like-
to wait for that turn.
Yep.
There's no point in fighting it in that chop because we don't know. It could go lower. But once the turn has occurred, then you can use the opportunities to fight for price. You can use all your trading skills there. So that's great.
Mhm. And then the level 2 picture, you can see clear size on the bid versus the ask, showing lots of buyers. And then the times in sales, you can see
Large size. Yep.
large size and obviously at or above the offer. So I think the turn's probably the most important part for us to watch. So we'll jump to that.
I mean, it's always interesting to me to watch the aggressiveness of the sellers where they won't lift because that's the drop portion,
Yeah.
and that has to occur in order for us to even have a trade.
We get that speed. So this is about where it happens. We get that speed down into that 23 level. There it speeds up a little bit.
And so, what are some ways that you could get involved to the long side here on this speed up?
So any type of, if we get a hold on the bid,
Yeah.
that's one way I'd look for. If we kind of get a stuff.
What about like ridiculous size on the offer that comes in and then gets taken?
Yeah, that's a good way.
Because then it shows there's a thing called a finishing print
Mm-hmm.
that can occur, and it's when very large size comes in. And the reason why a finishing print occurs is because an institution has a sell order, and they'll sell. Maybe it's sell 300,000 shares, in the first 30 minutes from the open. and maybe they'll give that to their execution desk, and their execution desk will sell 250 out of that 300 shares passively, and they'll just blast it for the other 50 so they can move on to something else. So you sometimes will see a really big offer step all the way down at the end, and then if that offer gets taken, that can be a finishing print, and that can signify that, oh, okay, now we can look for the long. That would be a way to fight for price in this trade. Try to think of other ways. Like obviously the held bid would be very, very interesting. But you won't see those unless you see that clear change on the tape.
So kind of what I'm looking at here, bids at 23.10.
Yep.
Anytime we get down into the 23.10s, I don't even think we pop below 10 after that first flush out. We immediately get bought up. It's not like we're moving higher yet, but it's kind of that middle zone.
So you want to identify the pattern. Go ahead and play the tape. You want to identify the pattern at which we're getting bought up. So we went 23.10, then we went to 22. Okay, do we go back down to 10? Almost. Then we go back to 22. Do we go back down to 10?
There's 12.
There's 12. There's 13. Now we're back up at that 22. Okay, this is kind of the range that we're forming. Right? And you don't have anything you need to do. Okay, we're up at 30. Okay, that's fine. Right? Are we going to go back down now? So we've been going basically in a 10-cent range, up and down, up and down. And, maybe it expands out to 20 cents or maybe it drops down to 15 cents. What we're looking for is a distinct change to occur. And only if we see a distinct change, something very obvious, do we actually have a trade.
Yeah.
Because otherwise we're just potentially still in the give portion of that trade.
And that was another rule, just kind of for this trade. I look for that extreme, like -8 on the tape for that first flush.
Where you really think it's going to go lower.
Yeah. And then we get that middle part of it's almost a neutral tape. Like buyers aren't in control, but sellers aren't in control either.
Yeah.
That's that range. And then once it flips to the +8, that's when that turn is in. And then I look to get long.
Yeah.
Do you want me to skip to when? I think it's pretty soon.
I mean, you should just be watching the tape. Don't worry about skipping forward. Just watch the tape. This is the fun thing about watching the tape for me because I actually don't know when it's going to happen. And,
yeah. So there we get down to 7, down to 6.
So this is -8 tape. Like they are walking that down, but they can't stick it.
Mm-hmm.
Okay, that's different.
Back up to almost 20. There
Yeah.
you go.
It doesn't mean it's going to work. It's just different. They're able to push it a little bit lower, but not actually hold it any lower. What are the 2 factors you might be looking for an entry here?
For me, well, the one that I took was that break above the consolidation.
Yeah, that's fine. What do you need to see? What's a variable you need to see in order for that break to have a high probability?
With that, I need to see volume on the break.
Yeah, so you'd want to see the tape, the
speed.
The speed.
Those,
yeah.
I believe those big green prints also come in right on that break.
Yeah, it
Right,
looks
right
like
here
they
is
are.
kind of that
Yeah,
first
that's
change.
it.
There's almost 50.
So where's your stop in the trade?
My stop was low a day.
Yeah.
And then once we reclaim VWAP, not on crazy high volume,
But that's what we want to see to be long, right? Yep. Everything that we just got is what we want to see to be long. We want to see that over aggressive press lower that doesn't stick. Then we want to see the buyers start to step in. We want to see them get above that 40, which was where it was, and then we want to see the bid step up above 40. So we got all of those things, which is really important. Now you can really fight for price because you know what are you targeting? Where's your move?
Yeah, so I'm really looking kind of if we can get back through that open price.
Correct.
And
yeah, that would be that would be your first step. So any aggressive down move, you're trying to look to see, okay, are the buyer's going to step back in and give me another opportunity to either add or whatever I'm going to do here. But generally, that's the concept. So that's a really good turn. That's not one of the more obvious turns, but it's still a very good turn because you see that last little press where you're like, this really looks like it's going to go below 23 now, and it never did.
Mm-hmm. So yeah, we get a little bit of a battle at VWAP, and then from there, it's just buyers are in control.
Yeah, great. So, okay, so that this tape is a good one to study for this particular setup. And it's important in this particular setup to be respect the fact that you can be late to this trade and still make a really good trade. Because if you're trying to fight for it at the bottom, you need to be in like from that 8 cents, but you're going to be very uncomfortable. The real right side of the V in this trade is after that move above 40 happens. So that's really important.
And then you can see I have that arrow on the volume.
Yep. So you had a volume
in.
increase as well there. That's
Yep.
good. Okay.
And then I also sell that next high volume candle, second highest.
Yeah, that's
of
a
the day.
reason to exit. Yep.
That was one.
Back through the open. Okay, great.
So for my technology, I thought this was super clear. It wasn't anything super special, but we get very good research analyst emails here at S&B. The top left is a bunch of different price target upgrades.
Yeah.
The top one was JP Morgan, which is a tier 1 bank for us, and then a bunch of others. And then just really positive headlines all around, quickly changing from speculative cash burn to profitable growth. And then the chart on the right as well confirmed my levels and my bias for that breakout of the daily.
Yeah.
So
Yeah, that's
those
great.
were all in my favor.
Okay.
And then, like I said, we were the top. This was the top name on the S&B scanner, and then my own personal scanner as well.
Okay.
For the trade review, I learned how effective reading the tape can be, especially like fighting for price, like we talked about. You don't have to be in at those lows, but the tape allows you to both fight for price and be on the right side of the turn.
Yep.
So that's a huge increase in probability for this trade, and it sets up a really good risk-reward move. The next time, I think I would keep my size the same. Maybe the initial position get bigger. I'm working on consistent sizing right now until I really prove edge. So that's the next step in my career. But then I look to get bigger above VWAP, and I did. We just didn't get the real volume where I can hit this really hard.
Yep.
So again, importance of trading with the trend. So many checks in my favor here, and then eventually I want to be able to size exponentially higher.
Yep.
So the last thing was I'm working on a scanner for this. I've noticed this pattern play out probably 4 or 5 times at least in the last kind of since this trade happened. Pretty much a hold like that. And the way I'm going to set up that scanner, it's not exact yet, but I'm going to either use the percentage of those 4 candles, the wicks versus the body. I kind of have a number in mind, but still playing around with that. And then overlapping wicks with no candle body interference.
Yep. Okay.
Yeah.
Those are interesting, particularly following an aggressive move. So you have, dollar down, basically a little over $1 down, and then the next 3 candles are in a range that's less than 25 cents. So less than 22% roughly of that first move. For 3+ minutes. So you could just write a simple scan for that, but that's super interesting.
Mm-hmm.
Yeah.
And then next time, I would look to add back as we put in a clear higher low, which is continuing with the trend, specifically on the break above high a day with the risk under that low.
Yep.
And then, but 24 wasn't a super key level, so
yeah, it's
I
tough.
need to see the price action to
tough.
put on risk.
Yeah.
But I think we did get that.
Yeah, you got it, and that's more of a second leg continuation sort of idea. But I like the trade you made. I think it's a good one to just piece out of. I thought you did the right thing.
Yeah,
there,
took
so.
20% off into that high day extension, and then from there we.
All right, so we'll do stock selection. I think you got a 9 out of 10. That was very good. Tempted to give you a 10 out of 10 on stock selection because you used the research emails and you used the checks in your favor. I think that's very good. Trade strategy. I really like the trade strategy, particularly being on the right side of the V for this trade. I think that's the biggest thing is there are going to be times you think you're on the right side of the V. You think you're buying into strength and you're going to get stuffed, but you have a hard stop below the low of the day. That's just what's going to happen. You're going to take it off and leave it alone. There might actually be a really good short trade that sets up there. So trade strategy, 10 out of 10. Diligence of presentation. This was very clean, very good. 10 out of 10 for that. Intraday fundamentals I thought were good. I think you kind of nailed it with the combination of the research emails plus understanding that this was a company that was showing growth when not a lot of people expected them to show growth. So that's good. So that's 10 out of 10. Reading the tape, 9 out of 10. You understood what you were looking for. but you want to be thinking about where that change would be, and you want to be like quick to recognize that change. But that's just an experience thing. So as you recognize that change, that'll be very helpful. Technical analysis, I think on both the higher time frame and the intraday, you did a good job. So we'll do 9 out of 10 there. I think the reason why it's not a 10 out of 10 is the divergence between that 25 cents can matter a lot, right? What if it wicked down 25 cents and then you're like, oh, this is really the level I want to be at? Then you want to actually look to take the trade, but you were pretty close, so that's good. 9 out of 10 is very good there. Trade management, I think you're overthinking it a little bit. We're going to go 8 out of 10 on that. The reason is because I think on the exit portion of it, that entire trade is that first entry. You need to be as aggressive as you can on that first entry, especially when the bid steps up, it clears 40, it tries to drop 40, and then the bid steps right back in there. That's your moment in that trade. That's really the moment in that trade. Everything else is kind of over managing it a little bit, which is super easy to do. But you want to recognize that moment in this trade, because in reality, you're risking about 35 cents and you're looking for at least 60 cents, 70 cents initially, plus maybe another dollar. So you want to make sure you're hitting it hard right there, because that's the best risk reward moment in that trade. So that's why it's an 8 out of 10 for the trade management. The worst thing you can do in a situation like this is over manage that trade. Have too many entries, too many exits, try and be late to that trade, because your probability, your EV equation, the probability of that continuing on continues with you, but the risk to reward gets worse and worse and worse as it goes up, because we don't have any new information. We don't have any new edge. We talked about the volume going away. So you really need to be very careful there and practice as you get better at this trade. When's that real moment where I have to be my biggest in this trade? Okay. Technology, again, 8 out of 10. I think you did a good job. I'd like to see some of these filters kind of built, but you're in the right place, and I'll be excited to see how that goes. Big picture, I thought you did really well. Recognizing that it wasn't really that important to this stock. 10 out of 10 there. That's really good. And then overall, your review, I like your solutions moving forward. I'd like to see a little more with the execution, but right now your goal is to build a really effective playbook, and you've done that in this trade. So I think we had, 6. So you probably are at like a 93 out of 100, which is pretty good for a go through, and it shows that you put a lot of intention into this. The only thought I would have is, let's find more of these setups and let's get better at executing them each time. And that means not necessarily trading them bigger at first, but just trading them better first. So get bigger on that first initial entry that you need to get bigger in, and then hold for a little bit longer. Like hold everything to your target and then wait and see what happens after that. But, get really good at getting those reps. But overall, really nice job.
So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of a laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of SMB Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training. That's why we're doing a new free online presentation in which we share how you can get an interview with SMB to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part, you don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.